You are looking live at a daily chart of the Nasdaq, which advanced 63 points today, or 0.39%, and closed at 16,166. You can see it did it on lighter volume than even yesterday. And then Friday, we had big volume on the OPEX close. If I look at a 5-minute chart here, you can see Monday we gapped up and then sold off into the close, and today we gapped down and it was bought back up. But really, I mean, in actuality, we're just kind of chopping around that old 16,212 numbers. You can see the last 4 weeks here, we closed at a 16,274 on the March 1st week. On the March 8th week, we closed at 16,085 last week. 15,973, and right now we're at 16,166. So we're just kind of chopping around for the last month. I'm a little more cautious because I don't want to give profits back that I've made in January, February, and the first part of March. So I'm a little more conservative. Short term, I'm cautious. Intermediate term, I'm a little more bullish, and then longer term, more than 3 months out, I'm very bullish on this year. It's just going to take a while to shop through some of this bullishness. I think the sentiment is pretty bullish as well. So people need to get shaken up a little bit, I believe. But anyway, I'm just going to take a look at some stocks. Yesterday, I couldn't help but feel when Jensen Huang was speaking, it felt a lot like the iPod introduction, with 1,000 songs in your pocket. It's like a new revolution here of products. And when he brought out the robots, it's like, well, where are we going now? Yeah, it was pretty impressive to say the least. I don't know where they're going, but if there's one stock that I would want to own, it would be this one. They seem to have the brains of AI. And today it was down. I got to go to the 5-minute chart. You can see it opened up lower. It looked like all the AI stocks were going to be sold off today. And then this one caught a bid when Jensen said that they're going to be more profitable. There's a bigger total addressable market. They're going to get a bigger piece of the share, bigger piece of the pie. So Nvidia is just being supported by the 10 there and looking fantastic. A couple stocks that are not. AMD was definitely one of the losers from the GPU technology conference. This one was down almost 5%, but traded down to its 50 SMA today, which was 177. Yeah, so hopefully it'll find support there and bounce here. This is what I'm talking about, some of this choppy stuff and giving some of your gains back. I don't want to do that. Broadcom. This one's looking kind of sad. Below the 50. Now, like I said, when it's below this 50 simple moving average, when you're above it, it acts as support, and when you're below it, it acts as resistance. So we've got to see Broadcom power through these moving averages, and it might, they might. I'm not, I hope it does. But right now I'm just kind of watching it. I had it on the 34. I want to get back on the 21. Yeah, it sliced the 10 and the 21, and then the 50. So Broadcom not looking all that good. When you see, the Nasdaq up, that Apple and Microsoft are probably having good days, and they did. Apple there. I'm not interested in that chart, but Microsoft looks fantastic here above its 10. One of your stronger stocks. Another one that seemed to benefit from the conference yesterday was a Synopsys. This had a nice bull wedge here. That's why I put it on my ready list. Bull wedge pulled back to its 50, found support, now bounced higher, $24 today, or more than 4%. So that one looked good as well. Anyway, I'm going to move on from this AI Nvidia craze. It is fantastic, though. It's like today's the first day of spring. Spring has sprung, and Nvidia sprung with some really new products, and it just seems like a new era. This is the first time I felt that way since, the internet boom, and like I said, Steve Jobs' iPhone or iPod, speech that he gave. And Jensen even threw a bone to us, Steve Jobs. He didn't say one more thing. He said, "There's more." But it was a fantastic presentation. I want to go to Disney, something I don't talk about often. But this is set up in a nice chart here. I had it on our ready list earlier at a much lower price. I want to say about 90 something, and it kind of moved away from that. But you can see this stage one base. Now, this is a slower moving company, a lot of shares out there. Look at that 1.8 billion shares. So it's a big battleship. It's not going to move fast. But you can see the up down volume here is 1.6. Anything over 1, is just being accumulated here. So there's buyers in Disney, and you can see now this got this standard buy point at 112. I could put this back on here. I like the fact that it found support at the 21 here and bounced higher. And that's what you want to see on the bounce. And that's what I'm not seeing from a lot of the leading stocks like ELF and just a lot of the Celsius. I don't know, just a lot of them. AMD, we're not seeing the bounces that, I want to see. Even Nvidia not bouncing like you really want to see it. Netflix is another one, the king of streaming. Looks pretty good, just surfing its moving averages, looking fantastic there. I'm just going through a couple of these leisure services. And this one I have on a ready list. I like this pullback here to a moving average, trading tight within a base after a big move higher. So that fits some of the criteria that I look for in a stock. Anyway, I've got to get to the oil and gas stocks because this is kind of what's working right now. I don't know if anybody's bought any of these. They're slower moving. Like I said, I don't really like them because they're inflationary. But you got to play with what's working. This is a long consolidation, so this is not going to rip higher like an Nvidia or one of those momentum stocks. It's going to be a little slower, but we want them going in the right direction, right? And this is going in the right direction above its moving averages. So OVV is another one. It's up 43 cents or nearly 1%. No great shakes, but it's better than getting your head handed to you and something like MicroStrategy or SMCI today. But you can see this is a long base here, a long base. So the longer the base, the higher in space. I kind of like that one. That's a international exploration. And this is a FANG. This is a U.S. exploration. I believe this is the best U.S. exploration. You can see the breakout, the move higher, getting a little extended above that 10 EMA, but looking fantastic. That's FANG, FANG Tidewater. This is a field services stock. There's, what do they call them? The wind power and in the ocean. These guys, fantastic. Yeah, offshore. That's the word I was looking for. Offshore energy in the ocean. That would be offshore, I guess. Anyway, PR, another one that I had on our ready list, but it, last week, I believe, or the week before, but it's pulled away from its base. Up 1.45%. It doesn't look like much, 24 cents, but that they're heading in the right direction. You're not losing money. Oil and gas stocks look fantastic. You know what else looks great? The insurance stocks. My goodness, Hartford Financial, it looks like they're selling GPUs here. This is doesn't have the growth profile that I like, but man, it sure does have the performance for an insurance company. That looks great. MetLife, this one made a new high today. Just surfing the moving averages, trending higher. Same with Prudential Financial, broke out of a base, moving higher. Those stocks are extended, though. I think one that's a little closer to a buy point is CoreBridge. This is a spinoff from AIG, and this one's looking good as well. So the insurance stocks look great. Couple of drug stocks today. FUSN, Fusion Pharmaceutical, was bought up. It's way up here. Okay, so the high and the low was what? 2085 to 2021 is like 40 cents, right? 36 cents. But a nice 99% move. You'll always take that. So congrats to the longs at Fusion. They got bought out by AbbVie, I think. Yeah. Right? No, AstraZeneca. Anyway, Madrigal, they did an offering, after they had a positive trial, right? Now they did an offering. It just pulled back 6% today, but it was up to 300 on Friday. Now it's pulled back a little bit. A lot of these biotech companies, they do offerings after big moves higher, so that's to be expected. IOVA got a approval for a cancer drug, traded higher, made that high at 1833 on February 28th, and is now pulled back. That looks like a nice you call it a wedge or an avalanche trade here. See if it finds support at 21. What other one? Oh, ALPN. This is what it was thinking about AbbVie. They had a partnership with AbbVie that the phase 2 trial was halted because it was successful. So it's halted for good reasons, not for bad reasons. And this stock was up 12% with a strong volume. You can see this bull wedge pattern here. Usually when they wedge down, this towards a moving average, that's usually bullish. And when they wedge up, it's usually bearish. So there you can see this thing has a tendency to kind of wedge down here. And anyway, so Alpine Immune Sciences, the drug stocks look pretty good today. What is the other one? Viking, VKTX. There you go. There's your like avalanche trade down to the 21. It was up nearly 3% today. They're going to have a readout pretty soon. So keep your eye on Viking Therapeutics. Okay, Jensen was talking yesterday a lot about, all the products and everything and all the partnerships and all the new deals. And he also mentioned the energies. They need a lot of energy to drive this data center and to drive this artificial intelligence revolution. And there's just a lot of energy stocks doing well. This is Constellation, which is a spinoff from Exelon. This is they just got a bond for a nuclear deal. And then, of course, power, Quanta Services, this one I mentioned a lot. And it's just surfing its 10 EMAs. I like stocks that just quietly trend higher. Nobody talks about it. Just moving higher. It's not in the financial media news or people aren't talking about it on Twitter. It's just quietly going higher. This is a construction ROAD infrastructure projects. Just surfing the 10, and that's what you like. Nobody talks about that one. Another one is power is Eaton. I don't know. I don't hear too many people talk about this one either. It's just trending higher. GE, a lot of people talk about GE. Another power, just trending higher. They look fantastic. STRL, Sterling, nice pullback to the 21 and a little bounce today. So I'm keeping my eye on that one. That's another like bull wedge pattern for that power company. So those ones look fantastic. A couple other, I did mention some of the construction. The home builders look great. DHI, I had this on our ready list last week. I don't know if I took it off this week or not. I took a lot of them off because I'm getting a little more cautious and trying to stay a little more focused and not getting too scattered here this week. But I had to put on synopsis. That one was looking good. DR Horton bounced off a moving average. That one looks great. Green Brick Partners, this one they trade. They build homes mostly in the South. Yeah, Dallas, Atlanta markets, and just pulled back to a moving average here. Traded underneath the 50 for a few sessions, and then now is rallied back through there. So Green Brick looks good to me. Toll Brothers, they reported recently, I don't know, they pulled back to a moving average, so found support. That one looks fantastic as well. What other ones? Oh, yeah, the HVAC, once again, showing strength. This is Modine. Looks fantastic. CARR, Carrier Global. This one bounced off a moving average today, 2.4%. I did have that on our list. And then Fix, man, I had this one, oh man, about 150 last summer. And I didn't buy it. And I kind of kicked myself for that because it's really just traded beautifully. We had this one cup here and gave us another chance. Rallied up here, consolidated in a flat base, and now it's just taken off. And I never did take advantage of that. So yeah, that's my bad. That's a really fine looking weekly chart, isn't it? Man, Comfort Systems. Anyway, moving on. I've got to go to the retail stocks because the retail has been doing well. CROX. I'm going to go to CROX. I just got back from spring training, and I got to tell you, a couple of things that make me cautious is one of the things a lot of people are talking about stocks and asking me about the stock market. And my friends from Silicon Valley are mostly real estate guys, and when they're asking me about the stock market, that my ears perked up because they never asked me about the stock market. It's like the Uber driver telling you to buy a Tesla stock so you could buy a Tesla car in 2020. It's like, I don't know about that. Or your butcher telling you, what stock to buy. or your mailman or whatever. It's just it's did not sit well with me, and that's another reason I'm a little cautious. My buddies do not talk about stocks. Maybe they were just being nice to me. But anyway, at spring training, I saw a lot of little league kids wearing Crocs once again this year. And this stock broke out of a base. You can see there's that move here after earnings, then pulled back to its 10. Now it's just surfing its 10. And this is a cheap stock. I mean, you don't value growth stocks by PE, but this doesn't have a whole lot of growth. Um, but it's got a lot of sales. You know, they're doing $1 billion a quarter, more than $1 billion a quarter, and it's you know, less than 8 billion. So it's less than 2 times sales. So it's not an expensive stock. Crocs is doing well. I don't think Hey Dude's doing well at all, though. I did mention yesterday about the retail restaurants, and I'd shown Chipotle, Mexican Grill, and it's doing great. I think I made a new high today. And this is Shake Shack, which broke out with earnings. It ran up to 108, now pulled back to a moving average, and now it's just surfing the 10. And that one looks fantastic as well. I wouldn't buy it up here. It's a little stretched up there, but if you're holding it, you're looking good. And then Texas Roadhouse. Some of the kids were telling me they love Texas Roadhouse. What was it, the bread or something? I don't know. I've never been to a Texas Roadhouse, but the kids who I was chatting with there in the Scottsdale, Texas Roadhouse is awesome. So I'll have to take their word for it. Anyway, this one gapped higher with earnings, pulled back to the 10, much like Shake Shack. Now it's just riding its 10 EMA. And I think that's it for me today, except for I lied. I have one more thing in honor of the great Steve Jobs. One more thing. SMCI woke up to a secondary offering. They're known for doing secondary offerings. They do it a lot. They just did a convertible note, I want to say not too long ago. So it's not unusual for them to do a secondary offering. What is unusual is that they didn't specify, that where they're allocating the funds. Normally they would say, CapEx, spending, or operations expenses. We know that their supply. They did send out a note saying that, clarifying their CEO Charles Liang's statement about the 25 billion in revenue, and they did say that if they get their supply, they could do 25 billion in revenue a year. So they wanted to clarify that. So it's kind of like Eli Lilly and Novo Nordisk with the drugs. If they get a manufacturer, they're selling as much as they can manufacture. It's just basically how much can they manufacture. So I don't think they'll have a problem with, the story didn't change. I think they're going to, probably beat earnings and raise guidance and all that. But they had a secondary offering, and what's kind of shady about this? First of all, Goldman Sachs is the underwriter, and I don't trust them. And it was 2 million shares plus 300,000 shares that could be acquired if somebody wants them. So anyway, on Friday and Monday, the S&P index funds had to buy this stock, and you can see it was 1100, 1147 on and on Friday it was over 1066 was the low, so they had to buy it at these levels, right? 1066, and yesterday the low was 952, but the high was 1147. So index funds had to buy this. They were forced to buy it. And it pulled back to its 21, and I thought it would bounce here. Then overnight, they announced a secondary with Goldman Sachs as the underwriter. Now, Goldman Sachs could be buying this thing here at 863, 870, while the index funds had to buy it up here at 1100, so they're getting a $240 advantage on these other funds, and that's how, you wonder how Goldman Sachs does so great in trading. Well, that's one way to do it, right? I don't know. It just seems shady. Maybe it was just SMCI just saying we need more cash, but I just don't trust it. I think it stinks. It's lousy business, terrible for shareholders. I'm sure the S&P fund managers are not happy. I'm pretty angry with SMCI for pulling this stunt. Yeah, 2.3 million shares. It's over $2 billion that they're raising here, and I don't really know what they need the money for. unless it's to buy more supplies. I don't know. You know, they didn't specify, and I have a problem with that. Like I said, they didn't specify what they're spending it on. I will point out though, if you're holding this stock, you know, it's up a lot. Yeah, we know it's up a lot. That if you look at the moving average, you can see right there, it's sliced, it's 21 today, like it's trading below it, right? Looks like it's going to the 50. But I know a lot of people, not a lot of people, but I know people use this 34 EMA, and a lot of stocks trade down to the 34 and then rally back above. So we have a couple things going on here with SMCI. First, it's got a gap down here at 772.50. Now that's a long way to go to fill that gap at 772.50, but now it also has a gap above at 952.06. So I don't know what gap it's going to fill. Is it going to bounce off the 34 and fill that 952 gap? Or is it going to trade down to this gap down here, 772? It's in no man's land. And that's too tough for me. And that's why I parted with most of my shares. And not that it matters what I do, but if you're holding it from 357, probably not a big deal. But like I say, I don't want to give my profits back, and I just thought it would be better safe than sorry. I have a little bit just in case it rallies above, but I don't like the predicament it is in. I do not like it slicing the 21. I do not like this company continually doing secondary offerings, waking up to see your stock down 10%. Just not good business. And anyway, that's it for me today. Down on SMCI with their secondary offerings. Like I said, they're probably, business has not changed. They're probably going to raise guidance and beat earnings and make new highs, within a few weeks. But it's just bad business for me. It leaves a bad taste in my mouth. I'm not angry or anything. I'm just kind of disappointed in that kind of business practice. It's a little bit shady. It's typical Wall Street shenanigans. And anyway, that's it for me. I'll have a more in the morning. Anyway, at mcstockcharts.com, we never give up.